Welcome back to Learn SKN, and today we are going to continue looking at section 6, economic management, policies and goals. But today we are going to have a short video. We're going to be looking at taxation and government expenditure. So we're going to be looking at taxation in a nutshell, types of taxes, tax systems, and government expenditure in a nutshell. But before we jump into that, make sure you like the video, subscribe to the channel, hit the bell to know when Learn SKN drops another video. Alright, so let's jump right into it. The government expenditure can be divided into basically two categories: capital expenditure and current expenditure. Capital expenditure and current expenditure. What is capital expenditure? Capital expenditure involves investment in capital goods such as roads, schools, and even government enterprises to produce goods. So let's break down this a bit now. Capital expenditure. So money that the government is going to be spending, but what are they spending the money on? When you hear capital goods, these are goods that are used to create other goods. Capital goods are goods that are used to create other goods. So when you're looking at it from a macro perspective, we're talking about things like infrastructure, roads, bridges, street lights, schools, hospitals, all that infrastructure, because they are used to produce other goods, other services. Roads are used to conduct almost everything, all businesses. Schools provide education services, etc. So capital expenditure involves investment in capital goods by the government, such as roads, schools, and even government enterprises to produce goods. So you would realize that capital expenditure is spent on goods that are used to create other goods. So they put the infrastructure in place. The government puts the infrastructure in place. When you hear about a capital project, that's where a government entity is involved in a large-scale project that would install something that would be used for a long time to make other goods. So you have the capital expenditure right there. So this expenditure is also called development expenditure. Then we have current expenditure. What is current expenditure? Current, as its name suggests, right, or recurring. Some people call it recurring expenditure. It's expenditure spent on goods for the present consumption. So for now, right? It's money spent by the government for things now for now. Whereas capital is an investment for later on. Because you're not going to build a road entirely right now. You know, that's a couple of months, maybe a year. You're building a school, it might take a couple of months, well. But in the meantime, you have consumption happening within the government entities, such as wages, such as toiletries, such as maybe ingredients for something, printers, ink in the government offices. All those things that are consumed, you know, now for now. That's what the current expenditure is spent on. Biggest of it, which might be salaries. You have to pay the salaries. Some people work weekly, some work monthly. There's no way anybody gonna work for months and wait to get paid at the end of 6-7 months. That can't be. So current expenditure includes things like your salaries, equipment in the office, you know, ingredients in whatever enterprise the government might be operating, things like that. So that's current expenditure, or, as I say, recurrent expenditure. So if you listen to your budget presentation by your Prime Minister, you'll hear about capital expenditure and recurrent expenditure. So capital expenditure is for more investment in more long-term projects, now for later investment, whereas current expenditure is spent on now for now items, right, such as salaries, wages, equipment, that kind of stuff. Now where does the government get majority of the money to do all of this? Where do they get the majority of the money? The answer for that one is taxes. The government uses taxes to raise revenue. That's where the main source of revenue, taxes. Right? Now before I go on, let me not forget this one, transfer payments. Now transfer payments are monies given to individuals such as retirees or persons involved in social welfare Now the thing about transfer payment is that you don't really have to do anything for it. Like for example, if you're getting a salary, you have to work to get that salary. But if you retire and you get your pension, you don't have to work to get that pension. If you're on social welfare or something like that, you don't have to work to get that payment. So that's what transfer payments are. They're not matched with any activity, any productive activity. So you get like pensioners get that money without having to work in that month. So that's what transfer payments are. So the money is given to one group by another for which no productive activity took place. For example, government payments of social security benefits. So those are examples of transfer payments. So those are some of the expenditure the government has to go through during the course of a year. They have to spend on current expenditure, capital expenditure, and transfer payments during the course of that calendar or fiscal year. And like we said, most of these monies come from taxation. So let's jump into the types of taxes now. So we just looked at the government expenditure. So now let's just look at types of taxes and tax systems of taxes, direct and indirect. So types of taxes, direct and indirect. So as I said before, taxes are the main source of government revenue. That's where government get most of their revenues from, taxes. And so there are different types of taxes. You have direct taxes and you have indirect taxes. Direct taxes and indirect taxes. Remember I said that taxes are the main source of government revenue, but it's not the only source. Other sources includes, you would know them if you come across some of these things doing business, fees, fines, dividends from state companies. So you have fees, fines, dividends, because some government actually invests in certain companies and they would get dividends from that. For example, here we have government invested in National Bank, the cable and wireless flow, so they would get some monies from these companies. And of course we know we have things like, police going around giving you tickets. Alright, you got roads going around giving a lot of tickets. So you have fines, you have fees to do certain things. You want to get a passport process, you have to pay a fee for that. Those kind of things. You go against whatever rule they have, you get a fine for that. So those are ways in which government also earn revenue. But back to taxes. So you have what we call the direct and the indirect taxes. So what are direct taxes? So direct taxes are those that comes, as its name suggests, right? Directly from the source. It comes directly from the source. So if you're working and you pay your levy or whatever, that's a direct tax. So income tax, that's an example. Personal and company income tax, that's an example. Property tax, it comes directly from the source. As the name suggests, direct tax. You work, before you get all your pay, you get your gross pay, and you get your net pay being after deductions are made. Some of these deductions include the direct taxes. So we can't get past that. Personal taxes, we can't get past that. They take them directly from our paychecks. Then you have indirect taxes. Now, the example of these taxes would be things like VAT. Right? A lot of us are familiar with value added tax, VAT, or general consumption tax. And then you have what you call things like custom duties, taxes. Now, why they are indirect is that they do not come directly from your salary, from your money, from the source. You have to do something in order to pay those taxes. In the form of a value added tax, you have to actually consume something in order to pay that tax. So if you do not go and take part in this service or this good, you would not have to pay the tax. You go to the supermarket to buy something, you see the VAT added to it. Had you not gone to the supermarket, you wouldn't have had to pay the tax right there. You wouldn't have had to pay that tax. So indirect taxes comes from not from the source, but indirectly. So you pay those taxes when you consume something, or if you import something, you pay those taxes. So those are the two types of taxes right there: direct taxes and indirect taxes. Now, there are different tax systems out there, and based on what the government is trying to accomplish would determine what tax system they use. So there are three main type of tax systems out there. You have the progressive tax system, the regressive tax system, and you have the proportional tax system. So the progressive, regressive, and proportional. Now, what are these taxes? And they're represented by these graphs under here. Right? This one, the blue line, the red line represents your income, and the green area shows taxes paid, how much they increase as your income rises. Right? So let's look at them one at a time. So, with the progressive tax system, who bears the burden of this tax? The wealthy. The wealthy pay a greater percentage of their income when it's a progressive tax system. So the higher you go, the more of that tax, the more tax burden falls on you. So the richer you get, the more you have to pay in tax. That's what we call a progressive tax system. So the burden in a progressive tax system falls on the wealthy person. As you get more and more money, you pay more and more tax. So you're going up in the bracket, you're paying more and more tax. That's what we call a progressive tax system. The tax burden falls mainly on the wealthy, the rich. Then you have the opposite, which is a regression tax system. Right? A regressive tax system. In this tax system, oh boy. Sorry, I didn't know I wasn't sharing the slides. Sorry about that. Okay, so let me go back since I wasn't sharing the slides. Sorry about that. So again, so as you can see from the diagram, the middle one represents progressive tax system. This red line marks your income, and as you can see, as your income goes up, so does the amount of tax that you're paying. Look at that, the tax just going up. So you, as a rich person, would be paying more taxes. The tax burden falls heavier on you in a progressive tax system. In a regressive tax system now, the tax burden falls more heavily on the low income household. The low income household, as you can see, as your income rises, you pay less and less tax. So the rich person paying the least amount of tax, right, is going down. So that's a regressive tax system. That burden falls more heavily on low income earners. The poor person is the one who gets most knocked out from a regressive tax system. Then we have a proportional tax system. Everybody pays the same percentage of income. Right? So that's why you see it here. Proportional is basically the same. It steadily increases. There's no sharp anything. So it's proportional. So that means that everybody pays the same percentage of income. So in that system, for example, if I work for whatever I'm working for, I would pay the amount proportional to a next person, same thing. So for example, if you and someone lives together and you want to share your bills, if I work for way more money than the person, then that should be a proportional sharing, right? It shouldn't be half-half or anything like that. It should be proportional. So I pay proportional to my income. So same thing. In a proportional tax system, you pay the amount proportional to your income level and not the same as the rich person, right? So good. So those are the three main tax systems that we have out there. So an example of a progressive tax would be something like income tax, right? The higher you earn, the more you pay. The regressive would be more like VAT. VAT is a regressive tax system. That is why only the poor man don't really borrow for VAT so much, because the poor man is the one feeling the VAT in the pockets. Right? The poor man is the one feeling the VAT in the pocket. So you can see that you're paying the same 17%, That's not right. Everybody getting the squeeze. So I might be earning 10,000 a month. So buying something with a 17% VAT on it ain't mean much to me. But if I earning just a little $3.50 a week minimum wage, and I have to buy the same thing with the same VAT on it, then I gonna get hit harder, because that's a bigger chunk of my income going towards VAT, as opposed to if I was making a lot more money. So that's why the regressive system hits the small man the hardest, right? So those are the tax systems. So we're gonna study it for now, and we're gonna pick up next time looking at probably section number 5 or 6, GDP, GNP, somewhere along that line, right? But the only way to know what we're going to look at next and learn SKN is to subscribe to the channel, hit the notification bell, and of course share with your friends, families, cousins, everybody. All right, so thanks for watching, thanks for listening, and stay tuned for much more to come.